Hi, this is Zach Mead from Zach's Traders Cafe with a look at the major markets on Wednesday, the 21st of September. Starting off with the FTSE 100 and just approaching a 68.70 resistance line there from August. Maybe a minor feature, but for cautious traders, they might want to see an end-of-day close above that in the wake of the Japanese central bank announcement. But an end-of-day close above 68.70 could take this market up towards the top of this rising June trend channel at 7,200 as an implied target over the following 1 to 2 months. This stage anyway back below the 50-day moving average for day traders, 67.77 would delay the upside scenario. Only back below 6,600 outright bearish at the moment. Onto the DAX, which seems to have gained rather more from the Japanese intervention so far than the FTSE. We had an island top there, double top island reversal for August-September. Now we've had a gap to the upside, which actually creates an island bottom for September. So all over the place really on this market. But 50-day moving average will be key, 10,438. That's the level there. And above that on an end-of-day close basis, and we are starting to get into bullish territory. Below that, we would fear that it was a failed gap fill up to 10,539. And we will head lower. So far, 10,522 has been the high. So very, very interesting battle there around current levels. For the US markets, here we can see that still in this consolidation. Interestingly, 2-day fade at the 10-day moving average, which is a bit of a negative there for the Dow, 18,210. So below that, still in that range between the 10-day line and 18,000. But probably at this stage, the best thing is to wait for a break. Either way out of that range, and then follow that. Possibly still favouring the downside scenario, given where the RSI is at 41.7, and the way that it's just seems quite tempting for this market to go for a gap fill below 17,500 out of test of the 200-day moving average after the gap to the downside seen in September. Onto the S&P, and here we're also in a consolidation type of situation. Here waiting for the 10-day moving average to be broken. 2147 is the level of that particular feature for the 2-day fader there. Key support 2120. Probably the best thing again, as in the case of the Dow, to wait for a break either way and then follow that move. At this stage, the downside is favoured just because the RSI at 43 is below neutral 50. Onto the Nasdaq, and what you can see here is good consolidation above the floor of this rising June trend channel, and also the 50-day moving average of 47.45. While above that, we're buying dips and looking for 4,900 or even 5,000 at the top of the June channel. Really, with the RSI at 54, it looks as though this market is just getting started. So maybe the Nasdaq is going to be the leading market to solve the riddle of recent confusion, let's say, between the bull and bear tax in leading indices. Onto the currencies, and that's sterling, still surprisingly weak below the $1.30 level, hanging down there for the last couple of sessions. The view at this stage is with all the key moving averages now falling, 10, 20, 50 and 200, way up there, 140. This market is going to be pressured. RSI at 39, so that doesn't offer scope to go lower. 127.98, that low in July, and perhaps at least while we're below that former late August support around 130.60, 130.66. A retest of July support looks to be the most likely scenario here, even though it is rather surprising to see sterling so weak below the 130 level. Onto the euro, which has been curiously becalmed in recent weeks. Slight breakdown here initially for the euro, with the push down below the 200-day moving average at 111.48. That'll be key for the rest of today's session. Above that on an end-of-day close, and we're back within the range between 111.50 and 113. Otherwise, a long-awaited break to the downside could be on offer, but obviously we are in a run-up to the Fed, and that comes this evening, and that could change everything depending on what they say. Onto the cross of the moment, and that's dollar yen. Interestingly, basically failed at the 50-day moving average of 102.60 so far today. Still within this triangle, actually. So probably waiting for the Fed to break out of this triangle. We've had this triangle normally 101.50 to 103. So wait for a break, end of day close outside those parameters before making your mind up. RSI at 47 or just under 47. Therefore, the bias to the downside for that particular cross on a technical basis. Gold managed to bounce again off this uptrend line, which has been in place since the beginning of the year, around the 1308 level. And what we're waiting for now really is to see whether there could be an end of day close above the 50-day moving average at 1332 to give us a new leg to the upside, and 1350 to 1400 after that over the next 4 to 6 weeks. But we'll wait on that, and in the meantime, we'll have new updates for you at the same time tomorrow.